Ever wondered why some people seem to have a knack for multiplying their money? What's their secret? Well, it's not as clandestine as it may seem. The answer lies in the stock market. But what exactly is the stock market and how does it work? Let's delve into it. Imagine a bustling marketplace, not unlike a farmer's market, but instead of fruits and vegetables, the commodities being traded are shares of publicly traded companies. These shares, often referred to as stocks or equities, represent ownership in a company. When one buys a share, they are essentially buying a tiny piece of that company, thus making them a shareholder. Now, why would companies want to sell pieces of themselves? Well, as it turns out, selling shares is an excellent way for companies to raise capital, the lifeblood that fuels growth and expansion. By selling shares, companies can generate funds without incurring debt, which can be a win-win situation for both the company and the investor. This magnificent marketplace of shares, known as the stock market, can be a physical place like the New York Stock Exchange, or it can exist virtually, as in the case of the Nasdaq. Regardless of location, the purpose remains the same: to facilitate the allocation of capital and allow investors to buy and sell shares. The price of a stock isn't fixed. It's determined by supply and demand, much like any other product in a marketplace. If more people want to buy a stock than sell it, the price goes up. Conversely, if more people want to sell a stock than buy it, the price goes down. Various factors can influence supply and demand, including economic conditions, the performance of the company, and even investor sentiment. For instance, if a company reports a surge in profits, demand for its stock might increase, pushing the price up. On the other hand, if the economy is in a slump, investors might be wary of buying stocks, leading to a decrease in demand and a drop in prices. To summarize, the stock market is a dynamic marketplace where shares of publicly traded companies are bought and sold. It serves as a platform for companies to raise capital and for investors to potentially profit from the company's performance. Prices of stocks fluctuate based on supply and demand, which are influenced by a myriad of factors, including economic conditions, company performance, and investor sentiment. So, the next time you hear about someone making a fortune in the stock market, you'll know they're not just lucky. They're participating in a complex yet fascinating world of buying and selling ownership in companies. And who knows, with the right knowledge and a bit of savvy, that person could be you.